welcome up again to the stage. This panel will be moderated by Mr. Eric Yakes. Come on up. There we go. Yeah. Let's go. Number 2, we have Mr. Oleg Mikhailsky. There we go. Look at him. We have Mr. Alan Farrington. Yes. And last but not least, Mr. Kelly Brewster. Give it up for your panel, your judges. And here, I take it away.
All right, thank you. We're back. I hope you didn't miss us. So we're here today to talk about venture investing in Bitcoin. Before we get into questions, I'll just ask the panelists. I know there are a few new people in the audience. Just quickly, kind of 30 seconds, if you could just introduce yourself, the name of your firm, and what you do. We'll start with you, Alan.
Cool. Yeah. Alan Farrington, founder, GP at Axiom. I'll probably just leave it at that. That's fine. We invest in Bitcoin companies.
Oleg.
Oh, yeah, I guess practice makes perfect. Yeah, I'm Oleg. I'm with Fulgrim Ventures. We started in 2018. We met a lot of cool founders on our way. And our mission is to create like a networking effect between founders and VCs. That's why currently we're also working on something that's called Plan B Network together with Giacomo. He was somewhere here. And Plan B Network is a network of physical locations, such as like physical Bitcoin hubs, Bitcoin buildings, where you can go and build a startup and meet other founders, and also a network of knowledge centers, both like virtual and physical. And yeah, we just welcome everybody to follow what Plan B Network is going to build to foster building more startups on Bitcoin.
And I'm Eric Yakes. I'm the founder of Epoch, not Epic, Epoch. And we believe that the infrastructure and core technologies around Bitcoin to make it a neutral monetary system for the world is the most important problem in the world to be solved right now. So our goal is to help solve that problem and partner with founders who are trying to achieve that.
Excellent. So let's get started with some questions. So one of the questions I hear a lot from founders is, I'm going to speak to a VC. You know, obviously they need to like what I'm building, but what are they looking for? And so, you know, if I think about later stage investors, you could look for revenue, you could look for user growth, there's more quantitative metrics to use. But as you think about, I know you guys, a significant portion of your time is spent investing in earlier stage companies. If someone just has an idea, maybe a proof of concept, and they're looking for capital, how do you judge it? What are you looking for? What are the kinds of things that you hope would come across in a first meeting, at least? Maybe we'll start with you, Alan.
Yeah, this is maybe even more advice directly. Drawing or just taking a step back, I think it's true for all of us, right, that we're exclusively investing in Bitcoin adjacent companies, let's say, where none of us are generalist VCs as such. And we're all, as a result of that, we're all pretty immersed in the Bitcoin ecosystem, the Bitcoin culture, to the extent there is such a thing. And so my advice for somebody in that position comes from appreciating both the pros and cons of that culture. And I think there's, you know, you could give a whole talk about that. I'm sure people have. I'm sure one's probably happening at some point on the main stage. What I have in mind, though, is that the Bitcoin community, again, to the extent such a thing exists, is by and large very generous, you know, with their, probably first and foremost, with their time, with their ideas, with their feedback, and so on. That can be a double-edged sword, though. I found this with a lot of founders, in that if a company is very, very early stage, if it's potentially the first ever investment that they're looking for, they'll have some idea, they'll have maybe even a proof of concept, that lots of other Bitcoiners will have volunteered their time to try to improve and to try to give feedback on, but the the kind of average niceness can almost be a bit of a problem in that it's not impossible, obviously, but I think it's relatively more unlikely that anybody will have told them the idea sucks, because everybody wants to help. And so the advice that I would give is do your best to try to get actual market validation for the product. Don't think that a bunch of other Bitcoiners liking it is anywhere near sufficient, because that bunch of other Bitcoiners probably likes every Bitcoin idea that they've seen, and in particular they'll probably more be reacting to your enthusiasm than they will to, at the end of the day, the cold, hard reality of whether this is going to work as a business or not.
Oleg or Eric, anything to add there?
When we started in 2018 and 2019, there were not a lot of founders in the space, and it was easier, like the measure of success was easier. You just like start doing something and you already succeed by doing just something for Bitcoin. If you do it in a proper way, you get some results that are like tangible because the space is small. Now as like the space has been growing, it's easier to think of building products at scale and scaling what has been built before. And one thing that's sometimes overlooked is how to use venture capital for scale. So basically, venture capital is capital and resources such as networking, knowledge that can be used to amplify what one is building. So understanding how to use venture capital as leverage, as an amplifier of what the company is doing is something that sometimes is kind of like overlooked at the early stages. But now as the space has grown, it's time to maybe like pay a little bit more attention to it and think about building at scale, using venture capital as leverage on capital and also as a resource such as a network and as connections and expertise in the space.
Yeah, and I think kind of riding off the back of that, it's, when you're looking at an idea and you don't have any tangible information to be working with yet, then you want to have, as an investor, we want to get some sort of assurance on how that is aligned with your roadmap, with your expectations of the future. And a lot of that comes from the background. It comes from having the right resources on the team. And to Oleg's point, having the proper investors that can allow you to fill those gaps in the early stages can be very important in that process. But I think that's one of the biggest things that I'll see is oftentimes there's, very large ideas that are emerging in this industry, but the actual resources that it would take to get to that type of goal and to set very tangible milestones of how you're going to get there and be very thoughtful about that process, that's very important in the beginning, because you're not just selling an idea, you're selling an execution plan, and a lot of times, you'll be encountering a lot of gaps in that process.
Great. I want to talk about something that's been a bit of a theme in Bitcoin recently, which is L2s. Lots of obviously different, sort of subcategories under that, but I know Eric and Alan, you guys have written a bit about certain types of scaling solutions or privacy solutions, Fedimints, eCash, stuff like that. What are your thoughts on just sort of that thematically, and are you seeing a lot of businesses in those categories that are investable, or is it more of a sort of technical trend at this point? I can start with you, Eric.
Well, Alan identifies as a layer 2 on Twitter, so maybe he would be better to start. But I don't have a clear answer to any of this. I think that there's a lot of really interesting emerging technologies. There's quite a bit of potential that we can see behind some of it. But the use cases and the demand isn't totally clear yet. I think like one of the things that we focus on is today, Bitcoin being used as a form of collateral and financial services around that that's something that's very tangible, that's valuable. Using it to settle collateral, that makes a lot of sense. There's a lot of big ideas, like I'll write about a lot of big ideas of what the future could look like with some of these cutting edge scaling technologies. But what their actual use case and application is today, it's vague. We're still, watching that emerge, and I think that that's something we watch closely. But so that's my very vague answer. Alan might have something better to say on that.
For eCash and Fediment specifically, there's a few companies that we've seen. There's some that have done fairly high-profile raises. I guess that's kind of the boring answer is just yes, there is some, but to maybe spin it in a more interesting way. And I think this comment probably goes well beyond that as an example. Really, any kind of Bitcoin or even Bitcoin adjacent technical development, like I'm going my way to say that to include like Nostr, for example, or other layer 2s, whether they're real or not. I think going forwards, what we would not necessarily expect to see, but probably be more excited by, would be less, XYZ companies popping up that are, Nostr companies, say, or eCash companies, but rather whether it's existing investments that we have made, or I think the ultimate goal would just be, completely normal businesses that don't ostensibly have anything to do with Bitcoin, integrating these. And it still is, I'd say it's very early for Nostr as well. There are some quote unquote Nostr companies that we've seen, that we've had the chance to invest in. Interestingly, though, I think from our portfolio, I won't name any names, but we have far more companies who are doing exactly what I just described, right? We invested in them before they had any idea of how or if ever Nostr was going to be relevant, and they're now realizing there are ways to integrate it. Because ultimately, I think you alluded to this in your question, almost everything that's really exciting about Bitcoin, layer 2s or otherwise, is ultimately just free and open source tech. And so the more widely that's used, the better. The less it ends up being confined within, the company that does that, the better as well.
When we started the fund, we were originally focusing on understanding how Bitcoin can scale, both as a technology infrastructure and as a social phenomenon. And we're very excited to learn about more and more scaling solutions and approaches. We believe that Bitcoin and Lightning Network are fundamentally built on the best and most simple engineering concept that provide a robust scaling infrastructure. And then there are things like assets on Bitcoin, either using Taproot assets or RGB or Liquid. And Liquid as a sidechain is also an interesting way of scaling that gives a little bit more flexibility. For example, you could still do new opcodes on Liquid that you can't do, or you don't want to do, or takes more time to do on Bitcoin. However, we believe that from the engineering perspective, scaling needs to be rooted into the engineering concepts, but the engineering solution needs to produce what's called basically a technology to market fit. So solving an engineering problem needs to address a specific problem in the market. In that sense, maybe some scaling narratives in general in crypto are maybe a little bit overhyped or overinvestment, but at sometimes scaling, for example, something like using Bitcoin as collateral is really a fundamental goal that can lead to more adoption of Bitcoin as a monetary asset. But it does not need maybe necessarily a lot of technology research. You can use companies like Debify, Fold are actually approaching scaling from that part, scaling Bitcoin as financial and monetary system. So in the end, we're here for supporting engineering-driven scaling and also social-driven scaling, but it does not always necessarily come to creating a new cool technology. It's just about making Bitcoin usable for specific use cases that Bitcoin is designed for, like a new form of money and an infrastructure for instant settlement without counterparty risk.
Yeah, what I'll add to that is, I think that's the exact point, right? Is that the well, I guess I'll take a step back. So I think when it comes to the scaling debate, one of the ideas that's been kind of like percolating and like, Alan and I have kind of written about a bit, there's all these technological solutions that people are trying to engineer to design these, perfectly trustless, different bridges or, things like zero knowledge rollups and all these different solutions that are going to create this like trustless, neutral type system. My view of the world is that we don't want perfect to be the enemy of the good, and that there's always going to be fundamental economic trade-offs that emerge in these trustless systems, and there's going to be certain applications for that are highly relevant. I just don't think that that's going to be every application, and in fact, it could be a vast amount of applications. It doesn't make sense from a cost or a consumer experience standpoint to ever go like a completely trustless route. That's something that's really interesting about eCash to me. eCash is something where, like, here's what I think makes Bitcoin decentralized more than anything, is that the marginal cost to participate in the network is low. That means a lot of people can join it at a low cost. And I think that eCash has a property like that too. And that's something that's really interesting to me because that can allow it to naturally remain decentralized at more of a systemic level over time. And that's the type of infrastructure where you're making a trust trade-off when you're participating, but you're going to be doing that in a lot of other centralized institutions as well. And from a consumer experience standpoint, that's always going to exist if you want to get adoption. And then, the other side is, people making arguments against Lightning, like Lightning is dead or whatever it is. Just like, no, it's finding its market and its different use cases. And for settling collateral, there's nothing else in the world that really competes with Lightning at a trustless level. It just requires very targeted, high-value types of use cases. And I think we're just watching that all flesh out. We're trying to see where the cards are falling with how these different technologies will work. And to Alan's point, there's going to be an integration of a bunch of protocols here. And we want to see different businesses using that integration and not necessarily even be specialized in one particular thing.
Awesome. I want to switch gears a little bit and talk about regulation and sort of the legal aspects of running a Bitcoin business. Obviously, there have been some high-profile legal actions brought by regulators in the United States recently. On the back of that, there were a number of companies that proactively stepped back from business they were doing, at least in certain jurisdictions. So what are your thoughts just generally on whether the landscape there has shifted, and how does that impact investing decisions that you make? Has the recent activity changed the way you think about analyzing potential investments? Maybe we'll start with you, Alan.
Yeah, I don't think my perspective on this as a VC is actually all that interesting. I have a far more interesting comment to make, which I'll get to in a second. I honestly just think from an investment standpoint, we're always very well aware of these kinds of risks, and I won't name names with this either, but the kinds of things that are now feeling regulatory pressure, we very probably wouldn't have invested in the first place, which is in no way a comment on the merit of the project, but I guess is more a comment on the merit of the business, which maybe is a good segue actually to the more general point that when I say the merits of the business, basically what I mean is that if you're doing something that is very clearly going to draw the ire of regulators, then it's maybe best to pursue that in a way other than getting into a very involved corporate setup with venture backers and whoever else, and kind of ensconcing yourself within the legal system that could just destroy you at any moment. The point I wanted to get to, though, which is basically irrelevant to my answer or my general thinking as a VC, but as a Bitcoiner I think is fantastic, is that you mentioned obviously not only are some companies have actually been more or less shut down, but others have stepped back. My favorite example of this is I forget what the actual corporate entity is called, but the guys who do Wasabi Wallet, who there's a distinction between, they run that, they provide the wallet as free and open source software, but they also have, or they had rather, a company that did the coordination of the coin joins. So they stopped doing that because of all of this regulatory pressure, and almost immediately, something like 10 or 15 more or less, decentralized is maybe overselling it, but this service is now being provided in a far more robust way than probably relying on that as a company, ever actually provided to the marketplace in the first place. So I think it's, in the moment it feels scary, but it's testament to Bitcoin's, anti-fragility, if you want to put it that way. I think it's a healthy development that, from the perspective of a VC is kind of irrelevant to what I would do on a day-to-day basis, but I obviously celebrate it for the health of the ecosystem as a whole.
Oleg?
It's a very controversial topic. Thanks for bringing this up. And we're not in business of giving legal advice, but we wish our founders pay attention to navigating the regulatory landscape properly. You can think of regulations at two extremes. So one is everything is fully regulated, and for most of the regulations, the mission is to protect the consumer. So mass adoption kind of comes naturally with regulation. And this is where we are seeing that Bitcoin is more on the white list, being clearly regulated and easier to navigate, so that there would be less regulatory traps if you're working in the Bitcoin space. But also it will be easier for consumers to access products and services that are that have underlying Bitcoin because of clear regulatory status of Bitcoin. So that's good for mass adoption. On the other hand, and this is where a lot of controversy is, Bitcoin kind of allows self-custody, almost fully decentralized or almost fully decentralized financial operations, and you kind of can come up with solutions specifically when the trade-offs on self-custody are very clear, that are kind of outside of the purview of regulations, or maybe are working in the markets where regulatory landscapes are still evolving. So this part is also very interesting, and I think founders should kind of properly evaluate the dynamic regulatory landscape to make proper choices and trade-offs, including technology trade-offs. Do you want to build something that looks more like a regulated service, but clearly addresses a large, mature market, or something that that has to navigate changing landscape, but can potentially address the next billion of unbanked people, for example. But all in all, if you want to build with less worry, just build on Bitcoin. Don't build on another blockchain.
Yeah, I think the only thing I'll add is when, a lot of the way that we consider things is on a case-by-case basis, and, that's not necessarily my expertise. My co-founder is a lawyer, and he's, covering a lot of that. But I think that geographic diversification, depending on the stage that you're at, too, is something that could be helpful in these types of scenarios. By diversifying regulatory risk in different jurisdictions, that can always help.
Can I just add one point? This is more picking up from where Oleg left off. I think something that hopefully comes out of this for prospective founders, right, would-be founders, is probably not super relevant if you've already gone down that road, is thinking very carefully about whether what you're doing requires a business in the first place. And it's obviously, in reality, it is somewhat binary. You either will do it or you won't. But I don't think the decision is. I think there's a lot of gray area as to what should lead you down one path or other. And I also kind of think that, again, this speaks somewhat to Bitcoin's anti-fragility and the robustness of the ecosystem, that whenever there is some kind of regulatory action that scares people, it forces this question and it nudges a lot of people more towards realizing that maybe they don't need a business after all. And I'd argue this is very much against my own interests, but that's narrowly as a VC as opposed to wanting the ecosystem as a whole to succeed. That the more projects that actually don't go down the business road, I would arguably say the better, because they will almost by definition become much, much harder to shut down. Obviously, there's a trade-off of, maybe that makes them harder to grow in the first place. Clearly, there are incentives to want to get venture capital, but it shouldn't be the default choice, I don't think. So the more people actually consider that before even making the decision, the better.
So taking a step back, thinking about your experiences as VCs in Bitcoin and seeing companies that have been successful. In this case, I'm talking about seeing companies that have had a harder time, taken some missteps, or things just haven't panned out exactly as they expected. Are there mistakes that you consistently see founders making over and over again that, if you could get someone at the beginning of the process and shake them by the shoulders and tell them you would highlight?
Yes, absolutely. Assuming we have already hyper-Bitcoinized, that is by far the biggest reason that we pass on investments, which may be perfectly good ideas, maybe amazing teams, blah, 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 everything that we're judging actually today, all the criteria we have. And this goes a little bit back to a comment I made earlier around the advice I would give in terms of seeking real market validation. If you can push that even further to validation from non-Bitcoiners, that becomes even better, because I think where this comes from, the reason I see it so much, the reason I find it so frustrating is, again, the strength and sense of community within Bitcoin. That it's a bit of a cliche anyway, just within tech startups, that you should be solving a problem that you have and that exists. But that's not necessarily enough to make it into a business that requires venture capital that will be able to grow if the market is really just you and your friends.
Oleg.
Yeah, it's probably an excellent segue for what I was thinking about, and I'm very subjective because my background is largely in sales and in business development, but in technology sales. And we had some interesting and controversial conversations here, at the water coolers. So from my subjective perspective, is something that is often overlooked is exactly sales and marketing. It probably doesn't make sense to try to convince anybody about Bitcoin and why they should be using Bitcoin. Somebody actually said yesterday that would do more harm than good. But explaining about what a company does and what kind of problem it actually solves, so that explanation is well received and understood by somebody who is not a Bitcoin enthusiast and who does not meet with this problem every day, who needs a little bit of education. So in that regard, the earlier you start doing the sales job and just trying to explain also what the product does and how it solves this problem in a unique way, and most importantly, why you need to pay money to actually be using this product. Because, and again, my background is a little bit old school. I was born into SaaS sales and business development. So we're probably in the new age now. Everybody is praying for transaction fees, but transaction fees only come to something when you have a billion users. But how you actually get to the billion users so that you can live off of the transaction fees. So there's a lot to be learned and not to be overlooked. And you can't just hope that Bitcoin will do the marketing itself. Yes, it will do a lot of marketing itself because of how unique it is as a technology and as a value proposition in general. But as a business, it's often overlooked how important it is to think about selling, but selling not in terms of pushing over your product and telling that it's better than this, it's better than that, it's better than shitcoin, but just explaining why it costs money. And the sooner you start to try to explain why it costs money, the sooner you arrive at a healthy business model and a healthy product market fit without just praying that Bitcoin will lift like tide and the tide will lift all the boats and everybody will end up well in the Bitcoin space.
Yeah, and I was going to make that same point. I think that a lot of times there's kind of gaps in the team as to who's needed to execute on that process in the earlier stages. And I often feel that there's a bit of an underestimation of the time and resources it takes to do other just more operational aspects of the business as well. You know, hiring and executing on that process. I need to bring on a salesperson. How do I write up that contract? What's market for this? Like, there's all these little details that can end up consuming quite a bit of your time, and not having the right resources or at least strategic partners involved in the business, it can put you in a position to where you're pressed for time, you have a high burn rate, and now you have to focus on a bunch of areas that aren't as growth oriented. And that can put you in a precarious position at certain points. I think, I guess one other point I can add too is that I think that there's kind of a trap where you can fall into over-intellectualizing your business in certain ways, rather than taking a much more pragmatic approach to what the current needs are today. This kind of goes back to Alan's point about like assuming like a hyper-Bitcoinized world. And if you're backing into the use case of your product from more of a philosophical merit, then that's typically not the right place to be starting, as opposed to like a direct pain point that exists today.
So thinking about sort of your portfolio, the companies that you work with, and what the experience is like after you've said yes and you've made an investment into a company. There's two sort of aspects that I'm curious about. Like, the first is, what would you say a founder should kind of expect from their VCs after the investment is made? What is the connectivity like? How frequently are you talking? What are you looking for? And related to that is, what's your personal style in terms of how hands-on are you? Some venture investors like to be very, very hands-on, know everything about the business. Others leave the founders a little bit more room to run. Where sort of on that spectrum do you fall? Eric, maybe we can start with you.
Sure, yeah. I mean, I don't really have a clear answer. I think a lot of it just case-by-case basis. There's certain relationships where I would naturally have resources or a skill set that would be more supportive. And there's cases where, you know, really I'm lean more towards the spectrum of like a capital partner. I think that, you know, when it comes to that, a lot of the very high ROI type support comes a lot more from introductions and strategic relationships. You know, we could spend all day rolling up our sleeves, getting involved in the business, but you're, you know, better set either, you know, finding those resources internally, and but, you know, once again, case by case basis with a lot of it.
Oleg?
Over the years, our portfolio has grown, and it's kind of like not possible to imagine like having like socially a healthy relationship with like too many people. There's just like social and cognitive constraints, and pretty much like there's just like 2.5 of us, and two is like Michele. He's sitting here in the back, so we're a very small team. So we obviously can't be like equally involved and helpful to every project, but it's, first of all, it's like a relationship because it's a long-going process, and you kind of like invest from both sides into building the relationship. There are certain areas where we're just like more specialized, such as like sales and marketing, specifically business-to-business sales, infrastructure, building the picks and shovels of the space, and maybe like not consumer applications, and also networking with other investors. That's why like I'm very excited and pleased to be here with Kelly and Alan and Eric. We are partners with Wolf as well. So networking to close the deals and to get as much support in terms of like leverage of resources, which is pretty much human resources and capital. That's kind of what we are striving to do best, I guess.
Yeah, very much agree that it depends completely case by case basis. Just to build a little bit on what both Oleg and Eric said, though, that what I'd encourage founders to do is, first of all, be as clear as possible about what your expectations are for a given backer, because they won't necessarily know until you've had the relationship for a while, kind of what I said it's case by case, but what case specifically is this? And there's all kinds of things that can go into it, right? It can be as maybe at one end of like a social spectrum, exactly how much expertise do you have in that technical area? Complete other end, like, do you have a good personal relationship with them? Because you're not going to be friends with everybody at the end of the day. The thing I'd add to that, though, even more kind of tangible advice that you can act on is tell your investors what you want from them. Like, you'd be surprised, in particular, picking up on Eric's point about by far the most efficient help that we tend to be able to offer is just making introductions, right? Because we don't know everything. We probably don't even really know anything. Like, we don't really know all that much that'll be relevant to every single business. But it's far, far more likely that we know somebody who does. And the absolute worst case is you waste 10 seconds of our time because it turns out we can't help. But please ask. Like, we'd far, far prefer you ask over and over and over again than never.
All right, I think that's a good note to leave this on. So thank you to our panelists. Thank you to everyone in the audience today.
All right, thank you guys very much.